Alright, hi everyone, welcome to today's pre-market analysis brought to you by IC Markets. Right, we'll be starting very shortly. Right, just want to make sure you guys can hear me loud and clear and see my screen as well. Alright, I think we're good to go. So alright, without any further ado, let's get things going. Alright, hi Gabriel, good to see you here. Good to see you've tuned in. Alright, I think we should be good to go. Alright, hi Roy. Alright, great to see you as well. Alright, awesome. Alright, okay. As usual, before we start, let's go through the disclaimer. Alright, so let me. Here we go. Alright. Okay, so take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or solicitation for the transactions in financial instruments. Pardon me. Also, take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital and you should only trade with money you can afford to lose. Alright, hi Philip, good afternoon. Alright, so it's a simple agenda for today. We'll take a quick look at the key news events that are lined up for this week. And then of course we'll also do the analysis on the major currency pairs, commodities, the indices, and of course I look forward to your requests as well for any instrument that you may be interested in. Alright, so my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Alright, so this is the calendar for this week. These are some of the main events or main news events to look out for. So take note, I'm on GMT time here, that's UTC plus 0. So we've got quite a few things lined up this week. We've got like a labor force survey up out of the UK as well on Tuesday, 12th of March, 7 a.m. We've also got UK GDP that's released on Wednesday, the 13th. And we've got inflation data out of the US. We've got CPI data on Tuesday, and then we've got PPI data on Thursday. We've also got retail sales as well out of the US, as well as industrial production and Empire State Manufacturing Index as well. So quite a few things to look out for this week. Alright, so we'll just start off with the UK labour force. Let's just look at this into a little bit more detail. Alright, Reg, so for sure we can cover the pound and the Aussie as well. Right, we'll start off with the DXY as usual, then we'll make our way down into the Euro. We'll look at the pound, and then of course we'll look at the Aussie as well. Alright, okay, awesome, great to see all your requests coming in. Alright, so just first of all, on Tuesday 7 a.m. GMT time, the UK will release labour force survey. This will be for the March and average earnings index. Claimant count change is basically an unemployment benefits number, right? So if you have a number that's is going to be increasing or trending higher, that means there are more people in the UK filing for unemployment benefits, so that could hint at a potential softening of the UK labour market, which could then potentially cause the pound to weaken. Right. Similarly, if average earnings index, this is the obviously the overall pay package or compensation package for UK workers. So should you see a trend like this in 2023 where it was rising, right, the average earnings index on a 3-month annualized basis was rising, this means that the earnings or the earning power of the UK worker is increasing, so that could potentially lead to more continued consumer spending. However, if we look at February's estimate, we can see the claimant count change, which is basically unemployment claims, increasing from 14.1 thousand to 20.3 thousand, and we can also see the average earnings index is trending lower as well, from 5.8% to 5.7%. Right, so if we get results that come in higher than 20.3 thousand and also lower than 5.7%, right, for the average earnings index, this could then potentially put some downward pressure on the pound. So take note, so the pound could see some selling pressures on pound change coming higher than 20.3 thousand, as well as the average earnings index coming lower than 5.7%. Hi Roy. Oh yeah, of course, for sure. We'll cover gold as well. Of course, yeah. As I mentioned, I said we'll cover commodities as well. So yep, gold and oil will be covered as well. All right. Then moving on to Wednesday, we have UK GDP data. So as you can see on the left, this is the monthly GDP data, which is what is going to be released on Wednesday, 13th of March, 7 a.m. However, if you look at the annualized growth rate for UK GDP, actually you can see in the third and fourth quarter of 2023, the UK fell into a technical recession. So what's a technical recession? That's when an economy experiences two consecutive quarters of negative growth, which is what the UK saw in Q3 and Q4. So the UK has experienced a technical recession, and you can see on a monthly basis that the average monthly GDP growth has been quite choppy as well. You see growth, expansion, growth, expansion, contraction, expansion, contraction, expansion, contraction, very minor expansion, then contraction as well. So you can see the overall on the monthly basis, the data has been weak. However, for January's estimate, we are seeing a pretty decent growth of 0.2%. So should the final result come in higher than 0.2% on Wednesday, this could then potentially provide a lift for the pound. All right. So take note how the GDP data and the labor force survey could potentially drive the direction for the pound, right? And moving over to US inflation data, right? This is going to be probably going to be the most watched economic event on data point for this week, right? As we saw in January over here, as you can see here, first of all, this data will be released on Tuesday, February the 13th. This data is going to be released on March 12th, but what I'm showing here is January's data. So January's data, when you look at it on a monthly basis for the core CPI data and headline CPI data, they both came in stronger than the monthly forecast, which suggests or shows inflation sort of heating up again in the US, especially with CPI. And also we can see the CPI rate on headline CPI on an annualized rate increasing as well, or rather coming in higher than the forecast of 2.9%. So these three data sets on Tuesday, February the 13th, showed that inflation for the month of January came in hotter than expected, right? So this created a pretty strong surge in the US dollar on that date, right? So as you can see, although headline CPI, which is on the left, and core CPI on the right, they're both trending lower, right? Their rate of change is slowing down. However, you could see the monthly data coming in quite hot in Tuesday for the month of January, right? So should we see data come in hotter than the estimates once more, this could then potentially provide or create strong demand for the US dollar, right? So take note, core CPI is expected to increase by only 0.3% on the monthly rate, which is lower than January's result. However, monthly CPI data is expected to grow at 0.4%, which is higher than the previous month's data. Any of the data points, right? Core CPI, CPI on a monthly basis, as well as CPI on an annualized basis, come in higher than the estimate for February, then this could once again create strong demand for the US dollar. Right, and then finally we have PPI data on Friday the 16th. Similarly, when we look at January's data, which is here on the monthly basis, right, for core PPI and PPI, they both increased very strongly on a monthly basis, and this also created or rather functioned as a bullish catalyst for the US dollar. So similarly, should February's numbers come in higher than the forecast again, right, 0.2% for core PPI and 0.3% for PPI, this could then once again create another scenario where we have strong demand for the US dollar. Alright, so with that, let's dive into the charts and trading view, and we'll start our analysis on the US dollar, of course. Alright, okay, so here am I on the daily time frame for the dollar index. Alright, let's just zoom in a little bit. Alright, so as you can see, since mid-February, the dollar has been in a strong downtrend, right? You can see it topped out at about 104.97 and has trended lower since then, right? Since mid-February. So last week it dropped to a low of 102.358. It tested this overlap support level here. This overlap support level is a pivot point here at 102.62. So yesterday, or rather last week, price tried to break underneath this level, but so far we've not had a confirmation of the downtrend continue, because we had NFP data on Friday as well, right? Last Friday we had NFP data which was stronger than the estimate, so this created a reversal in the direction of the dollar index. Right, okay, first support comes in here, which is this overlap level at 101.90. You can see price finding strong support here on 13th of December, 14th of December, or this is 13th and 14th, before retracing a little higher and then finally breaking lower. Then over here on 5th January as well, you can see price bouncing off this level once more, right? So creating a rather pullback support level here. So first support has been identified at 101.90, which is a pullback support level. Second support is very clear as 100.83, which is this swing low support that occurred on the 28th of December, right? Market structure showing us a very strong swing low taking place here. So this is how we've identified the first support, second support. So take note, for the dollar index, price is indeed testing a major overlap support level here, right? So far the body of the candle has failed to break below this pivot point here. Should that happen, then we could potentially see the dollar index falling. But however, take note, because we saw stronger than expected NFPs last Friday, and should we see inflation in the US returning, so that means if we see hot CPI data and PPI data, potentially we could pivot here at 102.62 and potentially rise higher as well. So right now it's bit of in a limbo, right? It's quite hard to call where the dollar index is actually going to go this week. This is really going to be I think CPI data particularly is really going to drive the direction for the dollar index. We could see price currently consolidate around 102.60, maybe perhaps for the first day or two, and then as we see inflation data come in, is really affected the dollar index. But take note, this is indeed a strong overlap support as well at 102.62, which is where the pivot has been identified. If we look in resistance at 102.98, there's a small pullback resistance here that occurred, right? You can see price has bounced off 102.97 in the past here, and it's also a level that aligns quite well with the 23.6% Fibonacci retracement. So this is an intermediate resistance level that I like to point out as well, because if you see prices if you see the dollar index reverse off the pivot and move higher above this intermediate resistance, then it could potentially go up all the way to the first resistance, retrace as high as the first resistance, which is this overlap support level here, right, that at 103.66, right, 103.62 is a strong overlap support level here. Price running into resistance 17th of Jan till 1st of February, and then finding support from 22nd of Feb till 6th of March. So this creates an overlap level here. So previous support previously was resistance, then this level functioned as support, so creates an overlap resistance level now. And of course, the swing high that occurred on the 15th of Feb, right? We can see the market structure signaling to us a very strong swing high resistance here. So take note, we could see the dollar retrace, bounce off the pivot for the first couple of days of fine, consolidate around this level here, right? We had strong NFPs last Friday, and because of that we may see prices consolidate for the dollar index until we see CPI data, which would then really drive the direction for the dollar index. Alright, hi Moron Dara. Yeah, okay, we'll look at Aussie dollar, Swiss franc as well. That's quite a exotic pair, I would say. Yeah, it's not something that I look at regularly or look at much, but yeah, let's cover that as well after we do gold. Alright, interesting to see other currency pairs as well. Alright, so take note, dollar index peaked in at about 104.97 in mid-February. It's been falling since then. You can see the strong downward trend. However, because we saw strong NFP data last Friday, plus potentially we could see strong CPI data coming up this week as well, we could potentially see the dollar index consolidate and reverse off this pivot level here at 102.62. All right, okay, with that, let's go on over to the euro, then we'll cover the pound, Aussie dollar, gold, and then we'll get to Aussie Swiss franc as well. All right, so of course, if the dollar has been falling since mid-February, then of course over that same period we're going to see the euro rise quite strongly, right? So you can see the euro making very significant swings here, right? You can see this is a swing high here that occurred on the 30th of November, a swing low here on the 11th of December, another swing high on the 28th of December, and of course this recent swing low since mid-February, right? We can see quite clearly the significant swing highs and swing lows that have occurred for this currency pair, which helps us identify suitable resistance and support levels as well. So as you can see, price the euro came very close towards the pivot point here at 1.0998. This is a pretty significant overlap level, right? We can see price, as I said, running to resistance here on 28th of November, swing high resistance, making a pullback resistance here on 14th of December. So the second time price got rejected at this level here before finally breaking higher, and when it did, it broke above, made the swing high here on 28th of December, coming as high as 1.1150 before reversing lower and then running into resistance again. So this is a pullback resistance level here, which is where we've identified the current pivot point here, right? So should we see data, especially CPI data for the US come in hot, right, that's going to create demand for the US dollar. So that means we could potentially see the euro dollar reverse around this pivot point here, pivot level here, and reverse to drop lower. Right, so take note, the pivot point at 1.0998 is a pretty significant pullback resistance level, and should we see CPI data come in hotter than expected, then yes, very well, we could see the euro stall around this pivot level here and reverse to drop lower, right? Then the first resistance, of course, for the euro dollar is the swing high that occurred on 20th of December, right? 1.1106, going as high as the top of this wick as 1.1142. And of course, the second resistance is this significant swing high that occurred in July, mid-July of last year, right? A very significant swing high here, which is where we've identified the second resistance at 1.1238. Right, okay, let's look at the support levels. Right, I've also drawn a Fibonacci retracement here, right? Oops, hang on, let me get my crosshairs, right? So I've drawn this Fibonacci retracement from here, right? This low here on the 14th of February going up to last week's high, right, which was at 1.0981. So when I look at the various Fibonacci retracement levels, right, we see the 61.8% aligned pretty well with this overlap support here, which is at 1.0805, right? This is an overlap level here with price with the euro running into resistance here in 9th of February, 12th of February, and then when price broke above it, it found nice support before bouncing higher. So this creates an overlap support level here, which is what we've used to identify as our first support at 1.0805, which is also a level that aligns very well with the 61.8% Fibonacci retracement. Second support is simply the swing low here that occurred on 14th of February, right, at 1.0707. Right, so that's how we've identified the support and resistance levels for the euro. And should we see prices stall around the pivot level here, this could be a potential sell entry for the euro as well, right? So take note, we could potentially see the euro stall around the level of 1.0998 or basically 1.100, right, and then reverse to drop lower should we see strong CPI data on Tuesday, right? Okay, then let's move on to the pound. So similarly, if dollar has been the dollar index has been falling since mid-February, of course we're going to see the pound rise as well, so which is what we're seeing here. We can see that this is the pound has broken above a major pullback resistance here, right? This was previously major pullback resistance level here at 1.2790, right? Price running into resistance on, what is this, 15th of December. Oops, where's my brush? Here we go. Price running into resistance here on 15th of December, then again on the 28th of December, right? Running into resistance here as well in January, 12th of Jan, and coming quite close to this pivot point again. So you can see multiple times where price has tried to break above 1.2790 since middle of December. It has failed to do so, and it finally did last week on Thursday, 7th of March, right? However, we saw this breakout occur, it took place, but then we see the as high as 1.2891, and then of course the strong NFP data last Friday pull back some of the gains that we saw for the pound, right? So we have an intermediate resistance level here, which is the top of the wick that occurred last Friday, which is at 1.2893. We have a potential pivot point here, so we could potentially see this pivot point here could act as support for the pound. Take note, we've got labor force report coming up right on Tuesday out of the UK. So if we see data that suggests that the UK labor market is softening in terms of claimant count change, remember that's unemployment claims, if that number comes in higher than expected, and we also see average earnings which comes in lower than the forecast, this scenario would potentially create or would potentially function as a bearish catalyst for the pound. So we could see price pull back all the way down towards the pivot point here, right? Take note, this pivot here could then potentially act as a pullback support. However, with CPI data on the US coming out, if that comes in higher than expected, then of course we could see price break below this pivot point and drop lower, right? So take note on how the combination of the labor force report as GDP report out of the UK as well as inflation data out of the US could potentially drive direction for the pound, right? First resistance of course is simply the swing high here that occurred on 13th of July, mid-July last year, right? You can see price making a very significant swing high over here. Also we can see price making a significant swing low here, another low here, right? And we also see a pretty decent pullback support level here as well, right? Price bouncing off 2520, right? Once on 11th of December, then again on 6th of February, and quite close last on 15th of Feb again, right? So we see this is another strong support level as well, right? So if you're looking for another major support for the pound, another major support for the pound would be this pullback support level here, right, at 1.2523, right? This would be the next support level for the pound. First support is this pullback level here that occurred on 28th of February, right? Price coming as high as 1.2700 on 26th of February, pulling back a little bit, finding support just above the 78.6% Fibonacci retracement before moving higher, right? So this is where the first support is. Pivot is here, so take note, the pound has broken above what was a strong pullback resistance last Thursday. This which we've identified as our pivot point now could potentially act as support as well. We could see potentially price pull back and bounce off this level to resume the downtrend. And take note that how the UK data as well as US CPI inflation data could potentially impact the direction for this currency pair. Alright, so this is what we have for the pound, right? It's just pretty strong bullish momentum since Monday, 19th of Friday, since Monday, 19th of February, with price breaking above this previous pullback resistance level, right? So we saw bullish breakout occur last Thursday. We saw this momentum continue on Friday as well, but we saw strong NFP data cap the gains on the pound. Alright, okay, with that, let's move on over to the Aussie. Right, similarly, as you can see, right, since mid-February, the dollar index was pulling back. Then, of course, over that same period, you can see the dollar rising quite strongly, the Aussie dollar rising quite strongly. Even the Aussie had a bullish breakout last Thursday, sorry, right? This level here at 66.13 was previously a pullback resistance level, right? Price failed to break higher here in 22nd of Jan till the 1st of February, right? Price finding support here in mid-Jan, we traced a little higher, but failed to break above this level, which then acted as a pullback resistance level, which we finally saw price breakout. We saw a strong bullish breakout last Thursday, but once again, we saw the strong NFP numbers cap the gains as well for the Aussie. So take note, the first support here at 66.13 is a major pullback support for the Aussie. Pivot point has been identified at 67.04, right, which is this overlap level here. We can see price finding support here on the 3rd of Jan, 4th of Jan, and then after that it broke under, finding a little bit of resistance on 11th and 12th of Jan as well, creating a pretty decent overlap resistance level, which aligns with the 61.8% Fibonacci retracement, right? So especially after the strong NFP data, you can see the Aussie really pulling back, almost giving up all of Friday's gains as well, right? So do take note, first support is going to be really important for the Aussie at 66.13. We could potentially see a bearish breakout for the Aussie should we get strong CPI data out of the US, right? So if we potentially see strong CPI data out of the US, that's going to cause the demand for the US dollar to increase. So that means the currency pair Aussie US dollar is likely to reverse and drop lower. So we could potentially have a bearish breakout on hand for the Aussie, right? Okay. Then first resistance, of course, we can see is simply the swing high here. Oops, where's my brush? Yep, here we go. You can see price making this swing high here that occurred on 27th of December, right? Price finding strong support over here, strong resistance here in 27th of December, and of course you can see price making a multi-swing high here, right? You can see two swing highs that occurred once, the first one taking place on 16th of June 2023, the second one taking place in 14th of July, right? So 68.99 is a multi-swing high resistance, which we've identified as the second resistance here. All right, moving over to support. We see, wait, hang on. Right, okay, moving over to support. Okay, we already said, okay, this is first support here. Second support is this pullback support here at 64.96, right? Price as price pulled back towards the end of February for a couple of days before moving higher, right? So you can see this is a pretty decent pullback support level here at 64.96, which we're using to identify as the second support. On the economic calendar for Australia, right, no major news events is what we saw on the calendar and Forex Factory. But however, take note, CPI data is more than likely to drive the direction for this currency pair as well. All right, okay, with that, let's move on to gold. Gold's really interesting, right? We've seen spot gold prices make new all-time highs, right? So let's just zoom out a little bit to appreciate how strong this move has been, right? The previous all-time high for gold prices first came in on 4th of May 2023, right? Price making this swing high here, right? We can see the market structure indicating a swing high resistance here at 2073. So this was the previous resistance, all-time high for gold, and it's a level that got tested on 30th of November, 1st December, right? 4th December, sorry. Price breaking above this level momentarily, climbing as high as 2,143 before reversing quite sharply and then running into resistance here again on 28th of December. So you could see 2073 was previously a very strong swing high resistance, a multi-swing high resistance, which taken out last when was this? This was on the 1st of March, right? Since then, with dollar selling off quite strongly since the beginning of March, we saw demand for, or we saw spot prices for gold pull much higher, right? So we see with that, price is currently trading around $2,190 per ounce, right, coming as high as 2,193 last Friday, right? So we could see a major resistance level for gold prices here, right? We see a major resistance at this pivot level here at 2,190. This is also a region that's identified by a combination of the Fibonacci extension at 127% as well as the Fibonacci projection at 61.8%. Now, how do we get these extension and projection levels, right? Let's run through it together. Right, so with price trading at all-time highs, right, we don't have any other resistance level that we can use to help us identify the next resistance level. So we have to rely on the Fibonacci extension and projections to help us identify any resistance that is going to be greater than 2,200, right? As you can clearly see, this was the previous all-time high. Then price made this new all-time high on 4th of December before finally price running now, making this latest all-time high now at almost at $2,200 per ounce, right? Because we don't have anything else that we can reference in terms of resistance, we're going to rely on the Fibonacci extension and projection. So we'll start with extension first. So to find extension levels, we simply draw Fibonacci retracement. So this retracement was drawn from here. This retracement is drawn from here. The swing high here on 4th of December this should actually end over here, and it ends down here. The retracement ends here at 14th of December, the low on the 14th of December, right? So we can see that the 127% Fibonacci retracement aligns quite well with the projection, and then we can try and at least, okay, probably I'll sort of, and we have another resistance zone here as well, right, between the 161% extension and the 78.6% extension here, right? Okay, so take note, the extension levels at 137% and 161% are found by using a retracement. So this retracement started from here, this swing high here on 4th of December, ending with the swing low here on the 13th of December, right? Let me just adjust the labeling so it's a little bit clearer, right? Things overlapping each other, right? Okay, so this is how we identified the pivot point by using the Fibonacci extension as well as the projection. So we figured out how to find the extension levels, right, at 127.161. Now how do we find the projection levels? Projection involves 3 points. So the first point started from here, which was this swing low that occurred on the 6th of October. Point 2, of course, is quite clear, is this top of this wick here on 1st December, and the third point is here, which is on 15th of February. So we can see when we do that, the Fibonacci projection levels 1, 2, 3, it gives us the 61.8% projection, 78.6% and 100%, which are what we're using to help us identify the pivot, first resistance and second resistance, right? So this is how we can use Fibonacci projections and extensions to help us identify potential resistance areas or zones, right, should we have no other reference, right? As you can see, price is trading around or close to the all-time high. It's we don't have any other price level to reference with regards to resistances, so we're going to use the extension levels and projection levels to help us identify them. Alright, okay, we got a request for dollar yen as well. We'll do that after Aussie Swiss franc, right? So we saw strong demand, or rather we saw strong NFPs last Friday, and should we see strong CPI data this week as well, that means we could potentially see demand for the dollar come back, right? So if we see demand for the dollar pull back, this increase this week, that means quite likely this level here at 2,190 is really going to be a major pivot point or pivot level for gold prices, and we could see it potentially reverse to drop lower, right? So take note how CPI data could add more fuel for US dollar demand, especially after the NFPs last Friday. And then we could potentially see, because with dollar rising, of course, gold prices and the value of the US dollar have an inverse relationship, right? So that means when the dollar is rising, gold prices are falling. When dollar is falling, gold prices are rising, which is what we saw since 20th of February, right? So dollar index fell quite sharply from mid-February, which is what we saw also fuel this strong rally in gold prices. So should we now see demand for the US dollar pick up because of strong NFPs last Friday and potentially strong CPI this week, then it's quite likely we're going to see uh, gold prices, spot gold prices, reverse around this pivot level here and potentially drop lower. Right, okay, so let's, okay, before I go to Aussie Swiss franc, let's cover dollar yen. Right, it's right here since it's already right here. Right, okay, so dollar yen has been falling also as well since 4th of March, right? 4th of March, dollar yen hitting a high of 150.90 pretty much in mid-February. Failed to break above this level here, and we can also see a little bit of resistance probably around here as well. And the pivot point, the major pivot point, is this pullback support level here at 146.29, right? You can see price making a nice pullback, finding a nice support here on 1st of February before bouncing higher. And last week we saw it pull back very close to this level once more before bouncing off it momentarily. So you can see this is indeed a strong pullback support level, which also aligns quite well with the 38.2% Fibonacci retracement, right? So we started this retracement from here, right, from this swing low here on the 28th of December, going up to the high here on, what is this? This is 13th of February, right? So we can see we are using the 38.2% Fibonacci retracement and 61.8 retracement to help us identify the pivot and support. So take note, this pivot level is quite key. We could potentially see prices for the dollar yen reverse of this level here, right? Especially if CPI data comes in hotter than expected, then of course, right, we are likely to see the dollar yen reverse, right? We could potentially see the dollar yen find support here and reverse to go higher, right? So where that resistance could come in is this pullback resistance level here at 149.09. And also if I look across, right, not only there's a resistance here, right, there's some pretty decent resistance of, well, finding support here as well, right? So this level was previously like a pullback support level, which now, right, this was a support level here, price bouncing off this level before finally breaking lower. So then this support level can now potentially function as resistance, right? So that's why we've labeled the first resistance at 149.09. Second resistance is clearly this pullback resistance at 150.87, right? So take note, pivot point here is going to be key, pretty crucial here for dollar yen, and especially we could see it reverse off the pivot level to bounce higher. And first support comes this overlap level here at 144.18, which is also a level that aligns well with the 61.8% Fibonacci retracement, right? You can see price running into a little bit of resistance here on 20th of December. Then when price broke above, you can see it found support here on 9th of Jan before going higher, right? So then this creates an overlap support level here, right? And of course, second support is simply this swing low, this significant swing low that occurred on 29th of December, right? You can see this is a very significant swing low support, price falling quite sharply for most parts of December last year, then bouncing on this level very strongly to climb much higher, right? So take note, because we saw strong NFPs last Friday, and should we see strong CPI data this week as well out of the US, we could potentially see the dollar yen reverse off this pivot level here, find support around this pivot level to bounce higher. Alright, okay, now let's move on to Aussie Swiss franc. Alright, let me see. It's a pretty exotic pair for me. I don't usually look at this currency pair. Let me see if I have it here on my watch list. Okay, no, let me see then. Okay, HF, do we have that? Okay. Okay, sorry, give me a second while I try and look for this. Hang on, just give me a second while I try and look for this. Right, here we go. Okay, got it. Right, so here's the chart for the Australian dollar Swiss franc. Right, as I said, this is a pretty exotic pair for me as well. Let's see how this currency pair has been trading. Right, so we just zoom out a little bit. Okay, so for most parts of 2023, right, you can see it's been in a strong downtrend, right? Strong bearish channel. Right, I can see there was previously a strong bearish channel here. Is this the, yep, which finally got broken. Right, this was previously a very strong bearish channel. Right, so yeah, so as you can see, since for most parts of 2023, this currency pair, the Australian dollar Swiss franc, has been okay, the question, is a resistance or support level located far to the left more relevant? Alright, yeah, sorry, which support level are you referring to? Right, okay, you have a question, or rather you've mentioned about a resistance or support level located far to the left more relevant. Which instrument was this for? Could you just let me know, then we can cover that, come back to that after I cover Aussie Swiss franc. Alright, if you just elaborate a little bit more on your statement, then I can probably try and figure out which instrument you were referring to. Alright, so back to Aussie Swiss franc. So okay, so this currency pair was in a strong downturn, which finally broke out of this bearish channel, right? In November, it traded sideways for most parts of November, dropping a little bit lower in the beginning of the new year, 2024, then bouncing higher as well. So we can see that right now prices are sort of ranging between 56.34 and about this resistance here, 58.39, right? So I see strong resistance around here. So but first of all, let's get rid of the bearish channel because it's no longer relevant. Let's draw a Fibonacci retracement as well from this swing high here on 25th of Jan, going down to this swing low here on the 18th. Let's pull up all the fibs. Right, so we can see, all right, price is already retraced above 23.6%, so that's no longer valid. Okay, I don't see any of the other retracement levels aligned well with the resistances. Where I do see the first resistance, right, is around here. Oops, yeah, this is the first resistance here. For Aussie Swiss franc, right, this is at 58.55, right? You can see quite clearly price running into resistance here on 3rd of November, coming very close once again, 30th of November, as well as over here in mid-December as well, right? So you can quite see very clearly that 58.57 is indeed a very strong resistance area. It's a pullback resistance. I can see this is a strong pullback resistance level here. So that's when second resistance, I see a pretty decent overlap level here, right? Initially price bouncing off 59.15 very strongly here on 28th of June. Price retraced a little higher, then finally broke under, and when it did, it found resistance here on 17th July, as well as here on 29th of September, and we can also see a support here, right? Of course, so this creates an overlap. This was previously a pullback support level, then after that this now creates an overlap. So it's a major overlap resistance at 59.15, so that's how we identify the second resistance. And we can also see that none of the retracement levels excuse me, align well with the none of the retracement levels align well with the resistances that we had identified. So because of that, I'm just going to get rid of the Fibonacci retracement here, because it's simply not relevant, right? If we don't have a Fibonacci level that aligns well with a major resistance or major support, then there's no point keeping it on. All right. Okay, then in terms of support, we can see price making a strong pullback support here on 28th of Feb, 5707. This is where I would identify the first major support for this currency pair, and the second one would simply be here, this multi-swing low that occurred on 21st of August last year, 23rd of October last year, as well as 5th February earlier this month, or earlier in early February this year. Right, so it does look like the Aussie Swiss franc is going to potentially rise higher. So where it looks like it's going to run into resistance once more would be around the area of the first resistance here at 58.57, this pullback resistance here. So should you have any long Aussie Swiss franc positions, right, if you've been long the Aussie Swiss franc since last week perhaps, and if we see prices continue to, or this currency pair continue to push higher, then you can consider identifying a suitable take profit within the vicinity of this first resistance, right? So anywhere between 58.50 to 58.60 would probably be a good zone to identify as a potential take profit for this currency pair. All right, okay. If not, sorry, let's move on over to oil, right? Let's look at oil. Yeah. If you have which instrument are you referring to? Right, and I'll be more than happy to go through that currency pair, perhaps commodity. All right, okay, so let's move on over to oil, right? So XTI USD is an instrument that tracks crude oil futures, specifically WTI crude oil futures, right? So as you can see, since mid-December, crude oil has traded pretty is a little bit choppy, but you can see the general trend has been to the upside, right? The trend has been to the upside, but it's been very choppy, of course, with geopolitical tensions in the Red Sea, in the Middle East, propping up prices for crude oil. And then we also have weaker demand generally in global demand is not as strong as expected, which is also causing this crude oil prices to pull back quite sharply as well. So you can see it is it's been trading in a pretty volatile manner since mid-December, right? We can see strong moves to the upside followed by strong pullbacks, then another strong bullish move, pull back again, and then pushing higher once more. So right, so due to a combination of the ongoing geopolitical risks and tensions, as well as global demand, which seems to be pulling back or not being as strong as initially expected, which is why we see crude oil prices pull back as well. All right, so you can see the pivot level here that has been identified at 79.72 is a strong pullback resistance level, right? You can see price finding resistance here once on 14th of November, then again on 30th of November, coming quite close to this level again on 29th of Jan, and of course testing this level last week since or not last week, since the beginning of March, right? So this is indeed a strong distance level, which is the pivot level here where price has reversed off this level last Friday as well. And so should you have any short crude oil positions today, and should price continue to fall, we can consider this first support level here at 76.34 as a potential take profit level, right? You can see price finding support here several times, right? You can see, right, quite clearly, of course, price finding support on 23rd of Feb, 14th of Feb, and also over around here 12th Feb. So you can see this is a very significant pullback support level, and where price could once again stall around this level and potentially reverse to go higher. So take note. So should crude oil WTI crude oil futures continue to fall as markets reopen this week, right? So any short crude oil positions, especially WTI, XTI, USD, we can then look at the region of $76.34 per barrel as a potential take profit zone for any short US for any short positions for WTI oil. Right, there may be a Fibonacci retracement perhaps we can use. Let's start here from 5th of Feb going up to 1st of March. I can see, right, we do have the 50% Fibonacci retracement and aligns well with the first support, so let's keep that on, right? And also because we can see price making a strong swing low here, right? You can see price making a strong swing low here that occurred on 2nd of February. So this would be the next support level for crude oil futures, and it's also with the intersection of this ascending trend line here, right? We can see price bouncing off this ascending trend line several times, and also here the swing low, right? So this is a strong intersection, right? So should there be, if I wanted to identify a second support, it would probably be around here, right? The second support would probably be around here at $72.06. All right, okay. We're coming close to towards the end of today's session, right? So do you have any requests for any other currency pairs or commodities or even the indices? If not, then I'll just do a quick recap of what to expect for this week, right? Okay, any all right, okay, if not, then let's just go back over to the slides, right? So maybe just this is right, this is the calendar from Forex Factory. So take note, I'm on GMT time here, that's UTC plus 0. So take note, we've got UK labor force report, which is going to involve claimant count change and average earnings index that comes out on Tuesday 12th of March 7 a.m. We've also got UK GDP on Wednesday 7 a.m. Then we've got CPI data out of the US 12:30 p.m. GMT time on Tuesday. This is going to be closely watched, probably one of the most closely watched news events this week. We've also got PPI data out on Thursday 14th of March. And then also we've also got, not only that, we've also got retail sales as well as industrial production figures and Empire State Manufacturing as well. Alright, so take note, February's estimate for the labor force report is at 20.3 thousand for claimant count change, which is basically unemployment claims, and then we have the average earnings index at 5.7%, right? So should we see claimant count come in higher than 20,000 and average earnings come in lower than 5.7%, this could then potentially cause or could potentially function as a bearish catalyst for the pound, and we could potentially see the pound pull back on Tuesday. And then on Wednesday, we've got the UK monthly GDP as well, right? So on Wednesday, after seeing choppy data for the UK GDP and also seeing that it's been a technical recession, right? Experiencing a technical recession in the third and fourth quarter 2023, we can see January's estimate coming in quite strong, growing at 0.2% here, right? So 0.2%. So should we see data, the final result come in greater than 0.2%, then this could then potentially function as a bullish catalyst for the pound, and we could potentially see the pound on Wednesday find some support as well. And then of course US inflation data is coming up, right? So we saw January's number coming in hotter than expected, which is why created strong demand for the US dollar on Tuesday, February the 13th. So on this Tuesday, March 12th, right, should we see CPI data come in stronger than the estimate, then this could once again create strong demand for the US dollar. Similarly with PPI as well, PPI came in very strongly in for the month of Jan. This is Jan's data here coming in stronger on a monthly basis, once again creating demand for the US dollar. So should we see PPI again on Thursday signal stronger monthly gains, this could then push dollar up as well. So I think in terms of the best setup for this week is probably going to be something that's going to be driven by the inflation data, US CPI data. So we'll go back into the euro, right? I think it's most likely going to be the euro that was going to see a good setup. And okay, what I mean is support resistance that hasn't been touched in a long time is more right. Okay, yeah, see your question here. I mean, support resistance that hasn't been touched in a long time is more relevant. Yes, potentially it is right now. So what major resistance and support levels that were formed in the past, right? They could then potentially function as ongoing resistance or support levels, right? Yes, they are relevant. Those significant swing highs or swing lows or pullback support and resistance that we see in the past are definitely relevant and could potentially function as major support and resistance at that in the current time. All right, so let's just go back to dollar index. Right, so we could see, because we saw strong NFP data last Friday as well, so we saw the dollar index bounce off 102.35 to come back above this pivot point, right? This pivot point is an major overlap support level. So far we've not seen the body of the candle close below this pivot point, and because we have CPI data out on Tuesday, we could potentially see the dollar index find support around this pivot level and go higher. So that means if dollar index is going higher, that means currency pairs like the euro, pound, Aussie are likely to fall. So if that were to occur, then probably the best setups would potentially be the euro or the Aussie, right? Because especially the Aussie pulled back very sharply last week, right? It made this high here at about 66.65. So should we see the strong CPI data come in and we see the Aussie break this first support, we potentially have a bearish breakout for the Aussie US dollar this week. So I think the best setup, one of the best setup for currency pairs this week is quite likely to be the Aussie US dollar. As I said, we saw strong NFP data really push back, pull down the gains on the Aussie last Friday, right? Almost reversing all of the gains. And then should we see strong CPI data out of the US this week, we could see the Aussie break below this first support and drop lower here, at least towards 65.60 or 65.50. So we do have a potential case for a bearish breakout for the Aussie, which could be fueled by a potential stronger than expected CPI data. So this is probably one of the better setups for this week. All right, okay, with that I've come towards the end of today's webinar. Thank you all for tuning in for this pre-market session, right? Do look out for all upcoming webinars by IC Markets this week, and I'll just end up with the ending disclaimer or the final disclaimer. All right, so take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, thanks everyone for tuning in today. Really appreciate your time. Yes, and good to see the requests come in as well, and so do take note, do look out for all upcoming webinars by IC Markets this week, and of course do look out for the UK data and US data news events that are going to be released this week, especially with regards to CPI data and PPI data, which is really going to drive the direction for the dollar index, and hence then we know roughly how the other currency pairs are going to trade in relation to that. All right, thank you everyone for tuning in. Have a great week, and I'll catch you at the next webinar. All right, thank you everyone, take care.